Russell Jones is the global head of fixed income strategy at Westpac Banking Corporation. He joins us now from Sydney. Russell, very good to see you. So, do you think that even if we get these votes through Greek Parliament, that the aid package could perhaps still be tripped up on this question of whether the banks will voluntarily roll over debt, or even whether the ratings agencies might say that this is some form of default anyway?
I think there's an enormous amount of pressure being applied to financial institutions in the Eurozone to accept this rollover, and I think they probably will. All the indications from France and Germany are that something will be cobbled together which will enable a formal default to be staved off, at least for now. There is a huge amount of effort going on in Europe at the moment to prevent, shall we say, the worst possible case coming out of Greece, at least for the time being.
You say at least for now. Does this aid package simply buy time? Are we going to see a Greek default in a couple of years? And if so, is it better then than now?
I certainly think policymakers will see it as being easier to deal with after 2013 and we get some kind of permanent resolution mechanism put in place, the ESM, so to speak. But we would certainly take the view that Greece is effectively insolvent, that the rollover of debt that we are going to see is only going to really scratch the surface of its really appalling debt dynamics. It's an economy which needs to grow, and frankly, when you have this degree of fiscal austerity imposed on an economy for such a lengthy period of time, it's very, very difficult to see how it's going to be able to be re-established on a sustainable expansion footing. I think that is really the bottom line here. No growth. Greece is not going to get out of this. At some stage, we're going to have to revisit the whole issue of default, and at some stage, probably going to end up with much, much more severe haircuts, or should we say more pain for ultimate investors than we're going to see over the next couple of days.
What is the big worry? Why not just allow Greece to default, take the pain now, maybe even let them out of the euro, as long as it's just one country? Can they not contain it at Greece, given that this country does have a special set of circumstances?
I think policymakers don't think they can contain it. They're very worried about spillover effects, not just into the other, shall we say, severely damaged peripheral economies, but some of those who are much more close to the core. A country like Italy, for example, there's very little confidence at the moment that this can be ring-fenced. And as long as that's the case, they will do everything they can to try and prevent that formal default. Whether ultimately it's a successful policy, I think is highly doubtful. And it does worry us at the moment that you have the ECB also seeking to tighten monetary policy at a time when perhaps the overall fiscal momentum of the Eurozone is beginning to ebb away as well. The circumstances are still extremely challenging, extremely uncertain. And as I say, I think it's unlikely at the end of the day Greece is going to get out of it.
Russell, very quickly, what does this mean for the broader bond markets? Where do you put your money now?
I think it's going to be very volatile for the time being. I don't think we're out of the sort of risk aversion phase. Probably still makes sense to keep a considerable part of your exposure in treasury bonds and also in bonds and in gilts. We're not out of this mess yet.
All right, Russell Jones of Westpac Banking Corp. Thanks very much for being with us.